All right out there, you loyal listeners. Welcome to Agents Influence, conversations with who? Jason Cass. And today I have a conversation with Mr. Caribou Honig. You're thinking to yourself as a loyal listener, I've heard this name before. If you're on LinkedIn, you say, I know this name. And maybe if you're on neither of those, you've never heard of them. But you're getting ready to have a joyous time. We're going to talk to somebody who's very smart. He may doubt that, but I just want to tell you right now he is. And he looks at the industry a little bit different. I think you're going to find out when we talk about InsureTech. I like to say Indie Tech also. You're going to find out that Caribou's going to know a lot of stuff. Caribou, thank you very much for taking your time to join us, buddy.
Well, thanks, Jason. Really appreciate your giving me the chance to talk to people.
People out there, Caribou, are just talking about InsureTech and VC carriers, and they want profit, and the VCs are now saying, hey, putting pressure on the InsureTechs and all this stuff. And some of it's true and some of it's not, but that's what I want to concentrate on. But for some of the loyal listeners, maybe who didn't hear you before, let's ask you some questions. You an iPhone or Droid user, Caribou?
Yeah, I'm long-time VC now. I find it hard to believe I get to say that, but been a VC for about 14 years now, give or take.
Okay.
And also had the distinction, I guess, of having co-founded what's now the world's largest InsureTech conference, InsureTech Connect, and bringing together the VCs and the entrepreneurs and the innovation executives. So really happy to sort of talk about all things VC and InsureTech, that overlap in the Venn diagram.
You an iPhone or you a Droid user?
I am an iPhone guy.
You are an iPhone guy. That's nothing. It doesn't surprise me. Then again, you are pretty techie. So, usually those Droid guys follow that, but that's okay. You're like 80% of the other people that are on here and in America. Do you love to win or do you hate to lose, Caribou?
I think to be a really good VC, you got to be someone who loves to win. If you're gonna invest, knowing that a third of your investments are going to crater, and probably another third are going to just do barely okay. Maybe you get your money back. Maybe you get a little bit more. It's really tough psychologically to hate to lose because you're going to lose over and over again. It's really about can you be a big winner some of the time, every now and then, so you don't have to care and fret about all the losses you're taking.
I like that. What a way to change that up a little bit, because people, I love to win or I hate to lose, but you're coming at it as a fact of it is kind of both, because you're hoping for all the wins, but you're understanding in your job, in your position, it's just the way it is. It's the numbers, right? You're gonna lose some.
You're gonna lose. You don't want to drive yourself crazy.
Just overall, from a high level, is that about what it is? Third?
It's the easiest approximation for me, and
okay.
I like to think in my career I've done that well. I'll take it. Some very smart VCs told me and some former colleagues years ago, like if your loss ratio, which in VC is like, okay, how much principal you have to write down, if it's not at least 25%, then you're doing something wrong. Because the view was, if you're not at least losing, a quarter of your investment, right, on a gross basis, then you're just not far enough out on the risk curve. You're not taking enough risk.
I'm only quiet because I love it what you said, the risk curve. So whenever I talk to my new producers and I train my new producers in my agency, the first thing we always talk about for the first 2 hours, literally, is how everything is risk. This whole world is risk, and there you go talking about it. With you, we say that there's two things that might have got you to where you are. Last question. One is skill, one is luck. Which you say has been a bigger factor in your life?
That's an impossible dichotomy, for sure. Both. I mean, look, I got lucky to have good supportive parents. I got lucky to be, born with a decent bit of talent. Right? I got lucky to be born in the U.S. Right? There's a lot of places where with my talents would go nowhere. So those are all, big luck. I like to think that I do have some talent, some skill, and that's contributed. And I've made plenty of flubs, but also done a couple things well. Great example, right? my prior VC fund, QED, one of our big wins, investing in early stage in a company called Credit Karma, right, which is now sort of a pretty well-known company bought by Intuit last year. And clearly some luck there in that, would have been easy for us to have never gotten the chance to see them. Would have been easy for us to never, met the great founder and been able to invest. Mm-hmm. But, fortunate for us, he did come across to us and we had the good insight to say, yeah, this is a great company. But not only did we have the insight to recognize it, but there's got to be at least a little bit of skill there, because this was a company that had gotten turned down by dozens of VCs in Silicon Valley, right, before he finally made his way to talk to us. So if any of those other couple dozen had said, yeah, I like this company, I see the potential, right, the luck would have never come our way. But there's something I like to think about, the skill, where we saw the gem here when actually a couple dozen other VCs did not. Right? It's that sort of going the contrarian thesis.
Right.
And, there's got to be some skill if you have a successful contrarian thesis. But no matter what, there's still luck in having it, having that knock on the door in the first place.
Yeah, when you're making that decision, and thank you for those answers, when you're making that decision, Caribou, and you're looking at this, and you're probably looking at, data and all that, is belief in the person who's bringing you this idea a major factor in your decision?
When you are investing, especially at the venture capital stage, but even if you're investing in Apple stock or, ExxonMobil, big companies, doesn't matter. You are always investing in the leadership there. Right? And you see examples out there where different leaders of the company make all the difference, where a company can be floundering, someone new comes in and the trajectory changes. You see that in small companies, you see that in giant companies, and you see it the opposite direction too, a leadership change and the company seems to struggle for years. Mm-hmm. In a sense, it's even more important at the early stage investing in venture capital, because they don't have the kind of inertia and self-fulfilling momentum that a Fortune 500 company might. So we're talking about a company with a couple $1 million of revenue, and it's so much, and early stages of building brand and reputation. Mm-hmm. It's so much more about what that leadership, both the CEO or founder and the leadership team that surrounds her or him, is able to actually build in the next few years. So it is always first and foremost about backing the entrepreneur. That's not in a vacuum. You can have great entrepreneurs who still say, well, I don't believe in that idea, or there's some risk that I'm not comfortable taking there, or it just doesn't fit for what I know and sort of have conviction around. But look, you never, ever want to invest in an entrepreneur that you don't have confidence in, no matter how brilliant the idea seems, no matter what the early traction is. If you just can't stand behind that entrepreneur, then everything else.
Gosh, that's got to be tough, Caribou. Like, you're sitting down and you got a great product or a great service, and you and your partners are like, dude, this is really good, except this guy or girl's an idiot, right? I mean, that's got to be so tough to know that, right? And you probably have an NDA or something that you just can't take the idea and run off to somebody else. Tell me what that's like when that happens.
Well, first, it's NDAs are rare in venture, but reputation and integrity still matter. Right?
Okay.
So you wouldn't do that because it's the wrong way to do business. And even if you could get away with it legally, it's unethical, and it'll bite you in the butt eventually if you try to do that. So
I like that.
I don't think that's typically a worry. But look, I think that it does, by the way, create real cognitive dissonance. So to be a VC, you kind of have to have a degree of arrogance. I'll acknowledge that. You've got to believe that you're in a well-positioned and savvy enough to say, oh, that is a great product, and that's a great idea, and that's an attractive market, and this is a really good entrepreneur. If you start to see some of these things that actually don't go together, So, oh, great product and a great market. I really love to go to market here. But you, entrepreneur, seem like someone that I don't have any confidence in. I've got to actually dig deeper in that case and try to understand, well, how is it that you, entrepreneur, I don't think you're all that great, seem to have come up with a great product in a great market and a great business go to market? Like, maybe I'm misjudging the product, by the way. Maybe I'm misjudging the entrepreneur. Keeping an open mind around the entrepreneurs is actually very important. There's been a lot discussed and written about diversity and inclusion, particularly in the venture capital space. And, I think one of those things is making sure that, we don't overfit pattern matching. Right? Oh, look, a Stanford grad, right, has, look, lots of Stanford grads have founded companies. Oh, look, lots of Harvard dropouts have founded really big companies. If you're not a Stanford grad and you're not a Harvard dropout, then, does my pattern matching start to tell me the right thing or the wrong thing?
Wow.
And
that can lead you the right way or the wrong way, right? I mean, you really can.
Look, pattern matching is useful, right? There's often signal in patterns, right? So I don't think we want to be blind to signal, but we want to also make sure we're holding any sort of signal to rigor, right? And making sure, is this real or is this just a set of assumptions? I think COVID actually has been great in one regard, right? There's silver linings to even terrible things like COVID, which is that the accessibility of venture capital based in Silicon Valley, right? Sort of massive concentration of Silicon Valley capital I think the barriers to accessing that has gone down, at least on the margin, in terms of geographic diversity.
Okay.
I no longer, there's sort of anecdotes around Silicon Valley-based VCs who will say, well, if I can't basically, drive, or even bicycle to your offices, then I'm not going to invest. And, that's kind of a barrier, right? If you're in Louisiana, right, with some great idea, great product, and, it's hard to bicycle from Silicon Valley to Louisiana. By the way, I'm in Richmond, Virginia, right? So I'm about as far from Silicon Valley within the U.S. as you're going to find.
Gotcha.
So I sort of skew towards, okay, let's think about what it means to be a Silicon Valley VC or a New York VC versus a Richmond VC, or what's it mean to be an entrepreneur in Louisiana, right, versus in San Francisco.
Wow, so many different dynamics that you just don't think about till you're in there. A lot of our loyal listeners have all had this thought too, since probably 2016, 2017, 2018, when we really started inventing this word InsureTech, and which it's, I think, in the dictionary now. I talked to Webster's yesterday. No, I'm joking. But my question to you is, when does the money run out, Caribou? When do you guys finally start saying, we need a return on this investment? And obviously you are. I'm talking about the industry as a whole, right? Is it tougher today for an InsureTech startup than it was maybe in 2017, 2018, or 2019?
It is so much easier now.
Wow.
So much easier. So I like to say in 2016, 2017, if you're an InsureTech entrepreneur, I think you're going to regularly have to answer the question, is it possible to build a multi-billion-dollar startup, right, company, get an exit, multi-billion-dollar in InsureTech? And look, clearly, quite a few entrepreneurs have been able to convince VCs that the answer to that was, oh, yes. Mm-hmm. And now we're at the point where there have been numerous multi-billion-dollar exits in InsureTech. So I don't think that the entrepreneurs get asked very often, is it possible to build this giant exit kind of company in InsureTech? Now they should still be asked, are you going to build a multi-billion-dollar? Why should I believe that you're going to do it? Yeah. That's actually as an entrepreneur, I'd much rather get asked that question to explain why I'm going to do it with this product idea and this distribution and so on, than have to answer the question of, can anyone do it? Well, that's a rather abstract question removed from me. So I'll start with that. And then, look, it actually does come to, you asked, when will the money run out? Well, Actually, venture is a very a positive feedback or negative feedback cycle. It just occurs over a 5 to 8 year time horizon for each turn of the crank.
Gotcha. Okay.
So, all the VCs that invested in companies that have now had or are on the verge of having multi-billion dollar exits, right? They're feeling pretty good about themselves, right? They've returned the fund, right, in those investments. They have LPs, limited partners, who invested in the VCs, who are now like, okay, you guys did a really nice job with that investment in those InsureTechs. You're raising your next fund? Sure, I'll invest in that next fund. And on the basis, in part, of your track record, in part on your track record in InsureTech, because you picked and invested in and backed multi-billion dollar exits back when they were, barely more than ideas. Well done.
Wow.
I think that as long as you have that success, it begets more success, or at least that success begets more funding, in hopes that there will be another iteration or two of additional success. So I think it's a lot easier now that it's really an established category.
Caribou, I'm not asking you specifically this question, just so that us independent insurance agents, we don't know this VC space, right? Does VC mean that a bunch of people come together, throw their money together, and then decide what they're going to invest in? Or do you go to a bank or to somebody who actually puts the money up with you guys guaranteeing it? Just trying to keep it simple in our insurance agent terms.
Yeah.
I'm just kind of curious. How's that go?
So I might say it's a little bit of neither of those.
Okay, that's fine.
Yeah,
I don't know, Caribou.
Yeah, no, that's look. It's an esoteric. It's an esoteric occupation. It's an esoteric asset class. It's a really interesting occupation. It's a really interesting asset class, but it's esoteric. So look, the first thing you described, a bunch of people come together, pool their money, make some investments. I'd almost call that an angel syndicate. Okay. So you've got a bunch of folks who, I'll say this in the nicest way possible, especially since there are a lot of agents in your listener group. A lot of wealthy folks meet over in the country club over golf and say, well, I keep getting pinged by these entrepreneurs that want some money, so what should we do? And they come together and each contribute something. That's fine. That's actually really valuable and important for a sort of technology or entrepreneurial ecosystem to emerge in a locality, but that's not venture capital.
Okay.
Venture capital, think of it as maybe some ultra high net worth individuals are contributing, but even more sort of institutional investors, meaning pension funds, right? Meaning charitable foundations.
Wow.
Meaning university endowments. Those are the bread and butter core LPs, limited partners, who have whole teams, right, around, okay, we are a multi-billion-dollar charitable foundation. We want the money we have not just to go towards our mission, but also we need it to grow over time so we can continue serving this mission for 100 years. Well, let's deploy some of that into Apple stock. Let's deploy some of that into timber futures. But let's deploy some of that into venture capital. We'll allocate a certain amount to this venture capital fund with its managed. We'll allocate some to this fund over here.
Wow, they are hoping, I had no idea that's what that could look like. That's amazing.
Well, and it's really part of it in terms of the fit there for those kinds of sources of capital. Is that venture not only is esoteric, but it's also a really slow burn, right? It's illiquid, right? And when things go well, you don't get your money back for 10 years. Now, when things go well, you don't get your money back for 10 years, but when you do after 10 years, you might get 5 times your money back. Gotcha. That's pretty good. But you don't, you might write your check as an investor in a venture fund. 5 years out, you might see nothing back from it or minimal, right? And you can't say, oh, well, I got to go, deploy the money I need the money back, guys. Can you give it back? And the answer is no, we can't, right? You're signing up for a long-term commitment, having the capital locked up and a high risk profile too. Back to, at least a third of the companies I invest in are going to go belly up. I just don't know which third. The fit there is that if you're a pension fund, if you're an endowment, right? Your time horizon for the money actually is 10 or 20 or literally 100 years, right? Our job managing the endowment for XYZ University, right, is not for the students today, it's for the students 30 years from now. Right. So when you tell me that this capital is locked up for 10 years, but my hope is that I'll get 5 times as much capital back, well, that's great. That's perfect.
So it seems like to me, now knowing that this is just more than if it could be banks or some people getting together, this is what somebody was genius at some point in time and said, hey, these people, endowments, universities, pension funds, they need to do something with this money. And if we're really good, because I'm going to be honest, if you can make it work a third of the time with some of the money that you're probably putting up, that's pretty good. Probably 20-25% of the time. That just blows my mind. Someone said, hey, someone's got to corral this, right? Someone's got to help these organizations. I could be the one doing it. Caribou, thank you very much for giving us a back end look at that. That was really, really good. And us insurance agents just see this hashtag InsureTech. We're like, how did that happen? So thank you very much. Let's get on to something else. Let's talk about InsureTech Connect. InsureTech Connect is your baby. What is it? I always say his name wrong. Jay Weintraub. I always say
Jay Weintraub.
Okay, Traub. I always say Trub. Traub. And Jay and you, I know from some of the past that this is kind of like your guys' brainchild, whatever. We don't need to get into that. But this has grown a lot. This has really, really grown. What was your reasoning for this at the beginning, you and Jay? And are you there now? Is this doing what you hoped it would do?
Yeah, so thank you for that. So it really started because I needed the right conference to go to. I kid you not. So 2015, I was starting to focus my investing on the InsureTech category right before it got into Webster's. And I was looking around for a good conference that would bring together the VCs and the entrepreneurs who wanted to talk to the VCs and raise some money, and the innovation executives from within the industry, whether at brokers, reinsurers, carriers, what have you, who were looking for, okay, what's next? What are these people, these entrepreneurs trying to build? Who should I partner with? Who should I buy? Or what should I build for myself? Right. And I just couldn't find anything that served that need. I was like, well, I kind of need this to exist. So not that I knew how to actually build it as a conference, but that's where I got, again, skill versus fortune, right? I had the skill, right, to say, well, I need this. Well, yippee, great, good skill there, Caribou. But I had the fortune to get connected to Jay, who knew how to create an industry conference like this. He was thinking about building an industry conference related to insurance. I was able to persuade him that maybe he should build something that fit my needs instead of someone else's needs, and then able to help him do that a little bit. But that was really what this is about. It was, and often with the best products, it is actually built to fit someone's need, and very specific need, right? So for the first year, we really use the goal is to make it great for Caribou. Right. Literally, not for someone like Caribou, not for ABC. It's, okay, Caribou, will this be a fit with what you want, what you need?
I love it.
So that then we'd be able to okay, let's hope that if we make it great for Caribou, that it becomes, that there's other people like Caribou too.
Right.
But
you knew that.
Well, it's always almost better to make it great for some narrow population than try to be good broadly. Because if you're good broadly, you're great for no one. And I think the best stuff is great for someone. And then you can build from there once you've established greatness for someone. So look, I think you asked me, is mission accomplished? And I like to think, yeah. I like to think, look, last year was a bit of a hiccup with this whole COVID thing, not doing mass gatherings. That's kind of tough. So that, and I think we did the best we could in terms of some digital content and virtual content and all that. But I think we also all know that that's not quite the same as gathering together 8,000 people, right? To be able to get the serendipity out of the event. So, look, I think we hear stories after each event about where people met for the first time, often by serendipity, right, at InsureTech Connect. And it can be funding conversations where some startup met the investor who ended up writing their check. It can be partnership, where some carrier and some startup actually ended up, getting to know each other, discovering each other at ITC, and then they arrange a business deal. Nothing in my career gives me more satisfaction, quite honestly, than those stories.
For real. And at the end of the day, it benefited Caribou. And when I say that, I take it away out of just you, though, because you did find out, as you said, if this benefits Caribou, hopefully it will benefit the others. It did, so it benefited the Caribous, right? I guess kind of like a herd of caribou.
Right.
So the great name as well. You're probably told that all the time. So then this, to end this and close this out with InsureTech Connect. When do we start to bring the 3, 4, 5 man, 10-man agency that's sitting on $200,000-$300,000 because we're super successful and we get paid well because we do awesome stuff in this industry? When do we start to reach down to them to say it's going to be a slower growth? It may not be as fast, but we need to go down there and we need to help what we call indie tech, those agents who are feeling they're not being served with InsureTech. And that's not a punch against. It's just where the money is and how it works right now. But we have agents who are creating awesome software and then selling it to other agents. And the only thing, Caribou, and this is what I want to hear from you, the only thing that's limiting them from scaling and growing is the lack of a lot of funding. What would you say about that, Caribou? Whether you have an answer or not, what does that mean? What do you think about that?
Well, a couple of thoughts. One is a lot of it's look. You're asking a real and deep question, so
Yes,
I want to
understand.
give a real and deep answer.
Okay.
I think part of it is awareness in both directions, right? I think there's an awareness of what's out there, what's available, right? And I think that the independent brokers, many of them perhaps could actually do some more digging and discovery for themselves around what's available, around what new insurtechs are offering new products, and would be happy to have a small independent agency take them on as a product. Right? But they can't. Some insurtech doesn't necessarily have the ability to go like broadcasting that message out and go knocking on the doors of 1,000 small agencies, but
makes sense.
Meet them halfway, right? Find them. I think there's also like tools and software. One long-term supporter of the event, actually, a company called Bold Penguin, right? Which I think has always been actually about helping to bridge, creating a software platform, actually serving a bunch of independent agents, among others, and carriers, and actually making things work better for them.
Good example, Caribou. Good people.
Yeah, totally. And I see other startups that are specifically like tying things together for a wide variety of agents. Companies like Broker Buddha is an interesting one out there. Bricks. I think that but I think that in terms of the independent agents building their own stuff and talking about, okay, can I get funding for it? How do I take this software to market? Look, I think that part of it is think about what business you're building there, because I believe an insurance agency or brokerage and software business are two very different businesses. Right? One is a real services business and the other is a real product business. And both can be great. Both are terrific, but they rarely should coexist under the same roof. So if you're a listener out there and you've got a nice, small, mid-size insurance book of business, right? That's funding your lifestyle in a very nice way, letting you invest in a bit of software, and you're building some software, right, and some product there that you think actually has the chance to transform how insurance gets done, gets distributed, gets underwritten, whatever. That's great, but they probably should not be the same business. They probably should not be under one corporate roof.
Right, that makes sense.
And you might have to make a decision. Which one do I want to be CEO of? Do I want to remain as the leader of a small and mid-sized agency and hand over the reins of a emerging software business, emerging new product That is not a service business. That is not an agency. Hand that over. Find some great CEO to lead that, and generate enormous wealth, right, on that basis. Or do I want to step away from running the agency and take my shot at scaling this software business that I've incubated under the agency roof? Fine, incubate it there, but if you want to scale it, if you want to make a real go of it, and if you want to get some external funding, you probably have to make a hard choice there about where you're going to put your time, and you probably have to separate them out.
That makes total sense. That makes total sense. I think that is one reason right there. I think we try to say we don't have the money, but sometimes we're not assessing the leadership that it's going to take to actually step away from one. A lot of independent insurance agents are really, truthfully, and they know that I say this because I love them, they're not the greatest business people. They're really good salespeople that decided to go independent on their own, and they've made a good living. And I say this a lot. Once again, Caribou, I'm not beating them up, but the reason really probably 50% of the independent insurance agents are in business is because of renewals. You can be a bad business person in this industry and you just still make money by showing up. But with that said, I think there are others that are out there, and I think that is a great point to decide. Like, is my agency good enough that I could step away from it, or am I going to have to sell the thing to do that, which does help with more money? Caribou, anything you want to wrap up with? Anything? Where can they find out about InsureTech Connect and stuff like that? Lead them to it.
Yeah, I appreciate that. So probably the easiest thing is if you Google InsureTech Connect. If you misspell it a little bit, Google will probably solve that, and we ought to be the top result when you get something pretty close to spelled right. And you can also find me on LinkedIn. One of the benefits of a name like Caribou Honig is that, again, even if it's misspelled a little bit, there aren't that many others who will pop up. Heck, you can, if you Google stupid career decision, I'm also the number one result, actually. So, we got that. That's actually true. I'm the number one organic result for stupid career decision.
Well, what a hell of something to be known for.
Well, that's, it's a living. But so easy enough to find us that way as well. So.
All right. Fantastic. I greatly appreciate it. And you are, Caribou, anytime I hit you up on LinkedIn, you're always quick to reply. If you're a loyal listener out there, understand that he does get a lot of messages, so it may take him some time, but usually he does reply. If you think you need to get a hold of Caribou and you need to get a hold of him ASAP, reach out to me. You guys know how to get a hold of me, and I can always relay a message to Caribou. So thank you very much. Last thing, I got 3 questions that I've added since the last time you were on, and well, actually 2. Leaders are readers and readers are leaders. I know you're a leader, so you must be a reader. What are you reading right now, Caribou?
I've been reading a lot of science fiction. It's my day is taxing enough mentally, so it's nice to relax a little bit. There's a book series, Old Man's War, that I've really enjoyed, and so I'm now on the 4th book of Old Man's War.
Wow, and it's a sci-fi.
It is actually another sci-fi that I've just finished. Really enjoy. Actually read it the second time just now. It's a book called Nod, N-O-D. Really recommend that as well.
You're not investing, you're not reading, right? You're probably, maybe you and your boo are watching Hulu, spending your time on Amazon Prime. What do you watch? What does Caribou watch? And if he says he doesn't watch TV, there's always something you put on when you're going to sleep or something. But are there any series that you watch?
I watch TV. Actually, right now, I'm in the middle of a series. I can't remember if it's on Amazon Prime or Netflix. It's one of those two, called Atypical. Atypical. It's actually about it's fiction, but it's about a family centered around originally at the beginning of the series, late high school young man who has a degree of autism, and it's sort of, as a series, it melds in both his struggles and successes, as well as the family's struggles and successes, not just related to him. So I actually find, again, it's fiction, but it's very well done fictional series, and I think it's actually quite sincere in a lot of ways.
Fantastic. Caribou, appreciate your time. Really, truly do. Check him out. Check out him. Check out InsureTech Connect. Here's what I've heard from independent agents that went there. The relationships and the connections that they built were very instrumental in some of the things that they're doing as they're trying to reach out for technology. One agent was telling me that he didn't know Hippo, he didn't know Openly, he didn't know all of these people, that he's always trying to get these contracts with, these large carriers, and they always want these huge commitments and stuff. And he's okay with that, but when sometimes you take on that large commitment, loyal listener, as you know, it kind of stops you from being able to go other places because they want commitments as well. I'm not saying that Hippo and some of these InsureTech companies don't, but they have a different mindset on how to do it, and they give you the more ease of doing business. I'm not here for a Hippo conversation, but if you go to myhippo.com, you can get a quote in 45 seconds. You bind an issue in 3.5 minutes. I challenge any independent insurance company to say that they can do that. So I really want you to think about InsureTech in a different way. Caribou has brought it up to us, and this has been Agents Influence. You know that what my job here is to take the voices of him and amplify them across the world. So I tell me your thoughts, tell me your ideas, and I'll tell the world what you have to say. This has been Cass with Agents Influence, and this is Caribou. You know him because there's no name like it. We're out.